All right, let's kick this thing off. Hi, everybody. I'm John Seroka with Seroka Brand Development and the Mortgage Technology and Marketing Committee Chair, and welcome to our webinar today, Carrying Forward Digital Agility into COVID-19 Recovery. Before we start, I'd like to thank our MTAM committee sponsors at Tavant. Headquartered in Santa Clara, California, Tavant is a digital products and platforms company that provides impactful results to its customers across North America, Europe, and Asia Pacific. Founded in 2000, the company employs over 2,500 people and is a recognized top employer. In 2019, Tavant software products and solutions enabled 1 in every 4 mortgages in the United States. Tavant's mortgage practices expertise reaches the top 13 of 20 lenders and banks across the U.S. Tavant engineers solutions for 5 of the 6 MI companies and manages data engineering for 1 in 3 credit bureaus and 4 leading fintech realty firms. Tavant's deep domain experience reflects in their products and solutions that have helped lenders and banks provide exceptional customer engagement. And now, for our topic today, ladies and gentlemen, carrying forward digital agility into COVID-19 recovery. Lenders, the lockdown to control the spread of this virus has forced our industry to earnestly embrace digital. Question, are you leaning into the digital future? What has yet to become fully digital, and how far short are we? Today, we will explore the differences between transactional digital and being fully digital and the way customer relationships can be created, nurtured, and actioned. So, with us today, I am thrilled to present to you Matthew Wood, Senior Director of Fintech Products at Tavant, Debi Roy, Director of Sales at Tavant, and Kevin Peranio, Chief Lending Officer at PRMG. By way of some background, this webinar is a production of the Mortgage Technology and Marketing Committee. The committee was formed to support the development and dissemination of new technologies and marketing strategies that the mortgage industry needs to embrace. As we go through this, please submit your questions and I will direct them to the right individual as they come up. Or you can wait until the Q&A time at the end. And with that, over to you, Debi.
Thank you, John. Hi, everybody. Glad to be here. I hope everybody's safe back home. Shall we really talk about COVID or maybe not? Let's take a look at the first picture. And guys, tell me if you can relate to this from any angle. So this slide, I'm sure you don't have to really carry a child in your arms to throw the pasta on the pot. But it just reminds us on, it's pushing us into new roles and testing our patience. We're trying to be more tolerant and try to juggle 5 different things at the same time. You are not traveling anymore, Matthew, if I remember right. You're staying home these days more often?
Oh, for sure. Yeah, I mean, I went from a life of travel to a life down in the basement.
So exactly, so we're trying to kind of feel like, how are we living in this new normal? Are we really susceptible to new challenges? Are we spending time with, with our near and dear ones, yet, working and pushing deadlines, finishing deadlines on time? The next slide would talk a little more about what's happening in and around. So if you take a pause and think, as pandemics like a real just a thread, or it's probably there's a silver lining. The first image on the left, it talks about the e-commerce businesses have boomed up so well, like 27% as per the McKinsey report. So we are being very mindful and cautious of what we are buying, what we are spending. We can buy a movie ticket or go to a movie theater or even go to watch nice sports, live sports. We are being more cognizant and thoughtful of, sitting at home, maybe cooking a nice fancy dinner. I was telling Matthew the other day, I'm just turning amazing meals every weekend and sending pictures to my friends and family, and not even my boss. I'm even not sparing my boss. Like, hey, what do you think of this food which I just turned? So we want to be that Michelin star culinary expert every now and then. But apart from that, the crux is you can't send your kids to daycares because those businesses are really shutting down to kind of a standstill. Or even people are getting laid off from jobs. So this is a time, I think, to have the crucial conversation with open communication with your employer, saying, hey, this is what boss I want, not being shy. those topics which you have parked so far, you want to take it out and, just being more open and bridging the gap, and maybe opening that extra bottle of wine, which we always wanted to have, because alcohol consumption clearly is going up by 40% as per McKinsey again. So Matthew, you better be watchful of your those extra crates of beer, because after pandemic, the liver is going to bite back at you. I'm pretty sure. So, if you kind of pause and then think, what are these important images which kind of resonates at the back of your mind? To me, it's home, remote work. By the way, remote work is going up by 47%. So staying close, connected, and being in a more secured place. So the next slide clearly translates over to what is home all about? How can we make the home buying journey from start to finish, convert that from a house to a home? Like back in those days, I remember when I bought the house, I had to drive around like 15 different houses with my real estate advisor, and it was a painstaking task. And then your banker is trying to be on top of it, get a pre-qual done on time. But in today's case, because of the pandemics, we can think our COVID it's not just a chaos, it's more like a catalyst for this digital impact, because you are companies like Yaza, you can have these 3D virtual technology, innovative, landscape where you can just get these 3D virtual tours done, everything integrated into your calendar, real time. So the hand holding from a real estate advisor to a banking agent to the final getting the keys out, I like to call it more a digital relationship building than just a relationship or transactional approach. And that's what the beauty of this digital tools and technology, which we are offering as a company or as a holistic approach. And even e-notary, like we always had to go to the branch to get the notary filing. Now these days we are trying to get an e-notary out, whether like 5-7 years down the line after the home buying, maybe your time has come for a refi, or maybe you're planning to move on to a better, bigger home. So data, speedy analysis of data is what we are trying to reorient our customers and change the mindset so that we lock this customer for life and we can replicate the same experience. So I'll take a pause, and Matt, I want to hear your feedback and your thoughts. Tell me about when you bought the house. How was that?
Thanks, Debbie. For folks kind of attending today's webinar, I think all of us kind of intuitively understand the way our lives are changing. But as you can see listed out on the slide, these are the discrete ways that we're seeing COVID itself impact the digital footprint of our lending companies. Now, not everyone has made the same change forward. Not everyone has adopted digital to the degree they'd like to. Not everyone was prepared to make the pivot that was required. But when you look at the fundamentals of our business, we are seeing some of the building blocks that we've been missing for a long time coming into play, meaning that something as simple as a remote notary, that's becoming a reality. Something as simple as we've talked about e-closing forever, but now we're seeing the reality of better closing experience come to the forefront. So one thing that I've seen, kind of just by way of analysis, we've seen that in interacting with the marketplace, we've seen kind of a separation between those that are digitally strong from digitally weak in terms of performance and productivity. So those that are strong are able to handle the volume more gracefully. We're under this tremendous pressure of the refi boom that we're experiencing. Those that are less prepared are kind of choking on the amount of volume that's in their pipeline. They're simply not able to meet their commitments, to customer expectation of how long does it take to close a refinance loan, which is crazy because refis are easy, but now they're taking, 60 day plus days for companies that struggled to be digital ahead of the curve. So one of the things that, I want Kevin to chime in on from kind of real world experience as a business owner. Kevin, kind of give us a little sense, kind of your story, as you've navigated into and through and eventually out of the COVID crisis.
Well, I'll tell you, this thing has been an accelerant for trends that were in the making before COVID-19 hit. So I always worked out of my house in the morning and then made my way to the office later. But now I'm on Zoom and hiding in my car more than ever because my children are so loud. And although I'm not that guy in the picture on the first slide, it's not too far off. So, but here at PRMG, you know, we're a privately owned lender. There's two guys that founded our company, Paul and Robert, and then there's myself and Gary, who make up the four partners. We have a technology roadmap, and Tavant's been a part of that roadmap for years. We've had you guys work together with us on several projects, and it's been an absolute joy. And so, you know, our roadmap is something we share with our vendors who are our partners. And what's interesting is a couple of our second half of the year projects got flipped to the front of the line, and they were just something like, yeah, you know, this doesn't, you know, it didn't move the needle as much as we thought it would. And then all of a sudden, oh my gosh, like you can't go to the title or escrow company and do a closing. So we pulled our e-closing, our hybrid solution forward, all the way forward, you know, and put that up. We use a company called Capacity that does, you know, they specifically do help desk automation. And we threw out a bot with a bunch of COVID-19 FAQs, and now we're trying to rip out Zendesk, root and stem to automate using this AI. And you've probably seen them at, you know, some of the shows. Really, really great company. And then of course the last one, you know, FinLocker. FinLocker is a fantastic trend that's been in the making. Consumers, as they get, you know, younger and younger, millennials, the single largest demographic in housing, you know, the first-time homeowner, they're taking ownership of everything. They're on Robinhood, they're on Mint, they're on Credit Karma. But here's FinLocker, which is a fintech built just for our business and our industry to empower them. And so, you know, we service loans, and we've serviced a lot more because of all the disruption in the secondary market. So, you know, one of our sub-servicers, they just have old technology, and they just have never invested in their technology. They've never told us they can give us white labeled, you know, just a basic white label statement to put my originator's name on, or in our wholesale channel to put the wholesale broker's name or the correspondent's name, a correspondent. So we shortcutted all that and went with you know, FinLocker and a couple of different vendors, you know, just to take advantage of, you know, some of these things that were trends that were in place before the pandemic hit, but they all got accelerated. So just to zoom out macro real quick and then get back to you. I mean, look, you know, Amazon was a beast. 10% of all business was done in e-commerce. In a matter of 2 months, it went from 10 to 30%. 30%, 20% increase of e-commerce in the United States happened in 2 months. You know, just everything is accelerating. And, you know, this technochasm between, you know, automation, process automation, it's getting wider. We were talking about job automation due to robots and RPA and AI. We were talking about that before. It's happening now, happening faster, and you guys are on the forefront of it. And we're just trying to play catch up and make sure that our business can scale.
Makes sense. Makes total sense. And I like how you highlighted the fact that a lot of it is acceleration of what we already had in hand. So it wasn't the fact that new things had to be invented. The fact was, you know, making that change like your company did in your plan. You had a strategy out, you know, was outlaid. The strategy was for 2020. The circumstances changed. You're able to pull that strategy forward and make the pivot so that you could take advantage of what was going to happen and come your way in April, May, and June. And again, leveraging
the pandemic pivot. That's what it's called. I mean, everyone's having to pivot to more consumer direct facing activities. You know, there's a path to pivot. The pandemic pivot, it's a real thing. I'm glad you brought up that word.
Yep. Trademark Kevin P. All right. So then the question, where do we go from here? You know, we've talked a little bit about, you know, the impact of COVID on digital and making digital kind of a real present reality. And the fact that the building blocks we've now put to use. I really like what you highlighted about kind of tearing out the old service desk and replacing it with a new approach, a more automated approach that takes advantage of what's present in the data. So what are the opportunities ahead, and how do we kind of frame them in our minds to approach them? Okay, first and foremost, the framing I think needs to be fact-based. We can get a little bit breathless when it comes to talking about digital. I love it, I like it, but at the same time, what's really going on in the economy? So 3 data points I want us to look at. Here you see on the left, this is the home purchases index from the MBA. So you look at their index, we've kind of come back to normal, and we're experiencing some volatility. Here's the next piece of data. Now this is the the National Association of Realtors Index, and they're saying we're almost back to normal, but it's because their measure is more multi-dimensional. They weren't just looking at applications for single-family homes. They're looking at other aspects of a real estate transaction. So we're almost back to normal for purchases. Now let's look at this piece of data. This is the forecast. All of us have probably seen this. And all of us probably watch it. But it is worth kind of grounding ourselves in the reality that's coming our way. What do we see here? Okay, refis are going to drop off precipitously. So all the fun that we're having right now is going to evaporate. We see that purchases are going to steadily grow. That steady climb is going to continue from a buyers in the market, demand to be met. We're also seeing that the overall dollar volume is going to be dropping from this year to next year and the following. Now, whether or not these are spot on to the dollar, I think directionally they seem to be correct. They seem to be correct in the sense that we need to be prepared to address a purchase market. If you ask me, what is the counsel I could give you when it comes to digital? One is look towards purchase, because that's where we're going. The second counsel that I would want us to consider is, what is the opportunity that you have within your company to drive productivity and profitability? This is the long-standing bar chart, of revenue and cost of loan generations put out by the MBA. It's lagging a bit. This is Q1 20, but nevertheless, there's opportunity there. And what we've seen as in my experience in the market, we've seen that there's some really strong high performers that have been able to address the productivity and profitability side of things through digital. Like Kevin described for us, clearly he's in that bucket in terms of strong performers that are willing to do and reach out and accomplish what the market needs us to accomplish. So we come back to this slide. We started with this, and I want us to come back to this slide in the middle of things to get a sense of what do we mean by digital. When digital going forward, what's a kind of a way we can ground ourselves in the digital thought. And Debbie, please chime in anytime you want to kind of contribute. So a couple of principles that Tavant has come across. One is, in industry, we've spent a lot of time, do you remember, reports? We all look at reports and we look at what happened, and then we're like, gosh, that's too bad that happened. And then we're reacting to it. And then we got reports that said, well, if you do these three things, then this other thing will happen or might happen. So we got a little bit predictive. And now we're at a point where we can be much more engaged with the marketplace. So point of thought, how do we find out, how can we act at the point of thought? Not when the customer has said, I want to have a mortgage, they've lifted up the phone, or they've gone on the internet and generated a lead. Not when they've gone to a realtor and started searching for a home. But how can we engage far up front at the point of thought with a customer, where we can understand through data that likelihood of intent, that it's going to be there and it's going to surface. And we can stand there and be present with the customer at the time that thought surfaces. And that sounds kind of fancy, I think, but at the same time, it's actually very practical. It's simply this. If you were to look at my life, there'll be moments in my life that are fairly obvious in hindsight of when I was ready to take on a certain economic action. And right now, of course, I'm in the middle of refinancing my home. That should have been no surprise to anyone that I would be ready to refinance my home. And really, the interesting thing is, I had one company reach out to me, and that was it. And I thought that was fascinating, that this was a time of easy customer acquisition, yet only one company found me. And that's the company that I did business with before. So
but I just want to add one thing, sorry,
please.
Is it's actually spot on what you said. It's more like react proactively. That's the word which kind of was just like at the back of my mind. And so we can still stay very much connected in this continuous loop. And because I see the middle of the arc is where we have the gap, because after we do the shopping and then the buying with the lender, it drops there. So to my understanding, what I feel, I want to stay completely very much connected to the client, to the customers, and get to know what's happening in the whole life cycle, the entire ecosystem is what I want to be a part of, to have those customers, closely connected for life.
That's right. Now, and to build on that thought that Debi added in terms of a customer for life and being able to be involved in our customers' kind of financial history from step 1 to step 12. Here's a question. We saw this earlier. We talked about how COVID was impacting digital and accelerating digital. So what's left? What is remaining? What's on the table for next steps? I think acting at the point of thought is a great principle to ground against. Another practical action is to think in terms of straight-through processing. Is it possible for your firm to identify loans that have no problems and treat them differently from the rest of the loans? Right now, quite often, every loan is created equal and every loan goes through the same process, and that actually drives a lot of cost into our business. So how would we do straight-through processing? What is missing in your operational footprint? Kevin highlighted some building blocks that they've changed towards that will take him in that direction. What's missing in your company? Not every company is cookie cutter because we need to start from where we're at. What are some other ones? If you look at the home shopping side of things, potentially you could say there's more we could do with AVMs and home valuation. The need for appraisal could lessen and lessen over time as the strength of AVMs grows over time through the predictive models and the use of data. That definitely is going to come our way, and we could locate we could build some operational strength around that reality to take advantage of it in a digital sense of take advantage of it. If you look at perhaps on the home ownership side, like Debi mentioned, a customer for life and the life cycle of a customer. So often our poor servicing companies are inundated with the transactional reality. It's very difficult for them to kind of lift up and engage with the customer when it's just a constant hand-to-hand data battle with getting the escrows right. Mm-hmm. So in that regard, there's some core changes that they need to do, but perhaps some third-party collaboration that could be taken upon them to make it easier. Have someone else manage that for you, perhaps. Isn't just one way to look at the world. Kevin, do you have any comments on kind of what you see as the digital vision forward for your company?
Yeah, I mean, we're growing. We're at 2,300 employees. We have 3 channels, and we have a full roadmap and tech stack, and it does evolve and does change. We're seeing a lot more use of RPA stuff on the guided UI path. We're just trying to make sure that our processes are more efficient internally. Underwriting is always the thing. I mean, if you're a lender, it seems like these underwriters just get more and more expensive, and now they're demanding, they're in high demand. And so we're working a lot on underwriting efficiency. So one thing, that's probably our biggest roadmap item is just make sure that we can work on that. That's the biggest thing. I will say this, one of the charts you brought up made me think, and I want to bring up this point and make sure that everyone understands. When that chart that showed refis dropping off precipitously, that's a real thing. MBS set mortgage-backed securities set a record price each of the last couple of days, and rates are very, very low. But a lot of us are not brand new. We know that in a matter of literally days, 1 to 3 days, these rates can go away. And our entire unlocked pipeline, 35% of it, done. You didn't secure the rate. Those loans no longer exist. Time to go back and beg realtors for deals and find first-time home buyers online using social media. So we can't forget about all the activities that help us with purchase business. And that, that includes better borrower experience, better websites, and creating a path to pivot to more consumer direct activities. You guys have a great, out of the box, website solution. You guys have built some really good stuff for a lot of different a lot of different companies. I won't name the name just because I'm not sure how much they want to be known public, but I know that you guys do good work there. And that really is the thing here is, look at Rocket Mortgage filing for IPO. They have 9.5% market share, bootstrapping that company privately. Now they're going to go to the public markets, and they're a well-run company. They're going to get a great IPO. And things just got more challenging for every other lender, every other originator out there, because your consumers are going to be touched using data even more. And you'll never know that, your neighbor who follows you on Facebook and knows you're a realtor or an originator, they're going to call someone else or get called by someone else because of some data-driven tech solution funded by the public market and IPO. But the good news is there are companies like, Tavant, FinLocker, and so many other great companies out there that are working on our behalf. And I think grinding it out for purchase money business, getting that borrower first, that borrower who's going to do 9 to 10 mortgages in their life between refis and multiple properties owned, we got to get there first and get to the consumer first. Even if I'm a 55-year-old loan officer who's always gotten my deals from the same 4 real estate agents, we have to find a path to pivot to more consumer direct-facing activities using technology.
I couldn't agree more. I mean, in prior conversations, as a working group we were preparing for today, we talked about how it's the reality in a purchase market is that our customers need that experience, and without it, we won't be able to succeed. Last couple of pillars before we move off of these thoughts on this slide, we talked about the point of thought, using data to action at the point of thought. Down at the bottom of the screen, you see 2 kind of very key principles. And these are principles that have been borne out from many different locations and borne out from our experience. Just like Kevin said, we need to work to improve the customer-facing solutions. What that really means is doing things the customers expect, and also delighting customers with things they didn't know they could do. Part of what we learned during COVID is that we can do things we didn't expect to do with our technology. And that's kind of a memory that we're all going to have. And it's a memory that we as in the business community can put to good effort in terms of helping our customers realize it's really not that hard to do it this way. You don't have to do it the old way. Let's do it the new way together. The second principle I want us to highlight is on the right-hand side of the screen, which is rigorously create and use critical decision support. What does this mean? It means link data to your actions. A lot of times I've seen in my career, and I may or may not have done this myself, I've built a really good digital experience. I've built really good websites, really good portals, really good mobile apps, but didn't strongly connect them to data. And so what did you end up with? You ended up with good e-commerce, but you did not end up with a powerful form of digital that can change your business. Remember, what we're trying to accomplish is we're trying to thrive in the times ahead, where it is a purchase market, where the last thing we want to be doing is begging for leads from a realtor. The last thing we want to continue doing is being held hostage by leads from an online provider. So us as mortgage bankers, us as brokers, we have tools that we can access. We have tools that we can use. And as a company, we can approach our customers and we can approach our data differently. I firmly believe that. So now, question. If I am the chief innovation officer of a company, what kind of digital opportunity is there? The answer is a lot. From a thought leadership perspective, we look at the space between home shopping and home ownership as a space that's ripe for both collaboration and connection. Connection helps us trade data, like FinLocker is a great example. Connection allows us to move data from point A to point B, so we can trust it and we know that it's the right data, and it can enable this notion of an e-file, e-mortgage. That's connection. And then also we know that we can collaborate. Third parties can, the way we use third parties, the way we interact with, say, that company out on the front end, that realty company, can actually change the way we find our customers and retain our customers. You know, one of the key missing ingredients that I see, one of the key missing ingredients that I see in the market is an idea as straightforward as collaboration portals. Still is kind of seen less often than more often, and that's a kind of a missed opportunity for all of us. I see that quite often. We think that our mobile experience should be kind of a secondary experience and supporting our primary experience. But what others are showing is that if you can make mobile primary, you can do some things you've never been able to do before. The way you handle images, the way you handle ID verification, the way you get docs from paper to image with a higher quality scan. All those things are abilities we have, for the most part, almost all of us, you know, in our hands with our smartphones. And again, it's a way of thinking a little bit differently around the expectations a customer would have. You know, when you look forward, you look at the potential of innovation. We can be as creative as we like in terms of our effort. I think the companies that will become very interesting are the companies that are going to be connecting data across these different hubs and spokes of the home ownership, home buying, and home shopping experiences. Debbie,
I want to add
any comments?
Sorry.
Please.
Yeah, I just want to add one thing, Matt, because you said Chief Innovation Officer, which would be great. So yeah, I would love to work with because coming from an innovation side of a company prior to trying to one, I know because there's so much fragmented data, right? So it's very compartmentalized. So if I get a chance, I would like to bind everything together. So it's one big single page, and then you can just read the page from start to finish, and then you don't have to flip the pages. I think in the current atmosphere, everything, there's so many pages and books not tied together. That's where the faltering cracks are.
That's right. And you may, and so I know one of the challenges that I might get to this line of conversation is, well, okay, that's true of like a big company. How could that be true of my smaller company? And the reality, it is. We all have data in our hands we could put together.
Yeah.
You know, and as we combine that data with an experience, that's where true digital is found.
Can I just interject? You guys are making such powerful points. I want to say something.
Please.
You know, as it relates to data, PRMG, a couple of years ago, about 3 years ago, we decided to take complete ownership of our data, and we created our own data warehouse. And so I know there's some lenders on here talking, they're like, yeah, I've already done that, but there's some that have not. And it's a very powerful thing to do. You know, we're an Encompass-based lender. We use Great Plains as our HR, payroll, finance, data warehouse. But the two of those were in separate places. So, you know, just basic reporting was always a challenge. You know, we used Motivity for many, many years, and we liked Motivity. Fantastic company, you know, just incredibly run. But as we evolved, we wanted to create our own data warehouse and take control of our reporting. Right. So we created a warehouse where it took all the payroll, HR, finance data, and then of course, you know, all of our Encompass data, and it scrubbed it and cleaned it into one place. And then we use, you know, Power BI to do that. Now, not everyone's going to take on that project. And I know, you know, Tavant does a good job of helping people, you know, coach people along and move through that data project. And so having reporting live, real time, or even once a day, depending on how big the database is and the refresh is, it's just really nice to see, you know, look, I mean, why does that matter, right? I mean, in the payroll finance department, a funded date is when the wire is sent. And so sometimes that, you know, sometimes that's the day before the closing, or sometimes it even rolls the day after. Whereas in Encompass, it's the funded date is the day the borrower's at the table and closing and funding. So taking control of data was a big thing for us.
That makes sense. I've seen one of my clients where through better data, they were able to forecast kind of the staffing levels they needed with more accuracy. So they didn't kind of over provision or under provision. And that's such a practical, you know, not so glamorous thing, but in terms of people's lives, that really matters. You know, you don't want to let people off. It does.
I mean, right? Think about underwriting right now. So everyone's dishing out overtime for the underwriters right now. So, so what do? You say, okay, well, these are my 10 most productive underwriters because of their unit count. So I'm going to give them overtime. Or, you know, most lenders right now are just like, hey, free for all, whoever wants it. take it. But when you're in a market where you're watching the nickels, you know, 1 through 10, you know, you could say, okay, well, if I add the payroll component and the cost per underwrite and the cost per funding down to the penny, maybe underwriter number 4, 7, and 6 in the rank of 1 through 10, those are the ones I want to give overtime hours to first, based on reporting and data. And you know, leakage when you're selling loans in the back end. We took our leakage several years ago from 12 basis points down to under 2 basis points. We were doing 5 billion. Last year we did 8 billion. I mean, do that math. That 10 basis points lift on $8 billion in production. You know, we're going to push 13 or 14 or 15 this year. That's real money because we created a data warehouse to get visibility on certain things and just get better. And so, you know, that taking ownership of your data, it really helps in so many different areas. I mean, we just rolled out an underwriting turn time report. All my centers are like, hey, when's the file going to get done? When's that file going to be done? Hey, you know what? Here's the report that everyone uses. Here's the line. Don't ask anybody on ops and waste their time giving you status. Look at the report. You know, just tons of ways to use your data.
Absolutely. And I kind of chuckle because I'm in the middle of a refi, like I mentioned, and the one thing that I haven't been able to get is transparency. You know, I have to ask, and then that person has to go ask someone else, and finally come back and let me know where they are in the process.
It's the worst.
Easy. Yeah.
Yeah, it's the worst. I mean, why not have the data that shows where everything is in a forward-facing, customer-facing status bar? Or,
absolutely,
you know, if you're an internal employee, just show everybody the report. Like, here's the line, here's the queue. You know, you got to ask someone who's going to ask someone who's going to ask someone. You just waste everyone's time. So now they get into your file, you know, much more slowly, and turn times just gotten worse, and everyone's more pissed.
Absolutely. And that's a good example of changing customer expectations. Customer expectations themselves are changing, but also they can be steered in a certain direction. If we had a more transparency, kind of a little scorecard of where your loan's at, and I knew that I could just go look at it anytime I wanted to, that's a new behavior and a new expectation. All right, we're kind of at the end here, and this is where I want to wrap up what we've been talking about today and give us some summary of the principles we've been covering. One thing, we're moving into a market where every nickel matters. It's a purchase market we're moving into. So we know that that's the economic challenge for all of us. We do know it's a growing purchase market though. Although there's some contraction overall in dollar volume, we do know units will be growing. So there is opportunity there. Two, if you're going to be digital, you have to ask yourself, how do I engage at the point of thought? How do I help a Matt Wood who wishes he could see where his loan is in his loan lifecycle journey without even having to go ask me? That's just one example, but there's so many other examples of wanting to be at the point of thought. I'd say three, you know, we gave two principles, changing the customer experience and, you know, taking really good, careful care of the customer-facing digital solutions, and then having kind of the courage to commit to data. And like Kevin outlined for us, when you have that courage to commit to data, it isn't trivial. You know, changing from 12 to 2 is a significant lift in the business. So when you look at these kind of four principles on the screen here, the one that I think is kind of the most interesting is the right-hand one about the people. You know, as companies, because we've been responding, you know, in real time to the changing reality of our life with COVID and the pandemic, we're actually moving faster. We're moving more unified as a company, as a group of people, and as teams. I think that's a huge gain that I want us to hold on to. So if you're to ask me where to focus, start there. Start with your people. Start with the agility, because with that agility, you can make the pivot. You can make the pivot into what you need to do now, and you can make the pivot post-pandemic. So we're going to say the post-pandemic pivot also, just to add another P to it.
I love
Start
it.
with the people, end with the people. Yeah.
That's a less costly PPP for our tax dollars.
Guys, people are the biggest competitive advantage.
Hashtag dad jokes. Okay, continue.
The other three, hang on, the other two on the screen are a little bit more effective, and then Deb will hand you the microphone. The selectivity of what you're going to tackle, that's like the example that Kevin gave us about a data warehouse. is when do we want to do it? When can we do it? When should we do it? As a company of any size, you don't have to transform everything. The question is, how do we pinpoint the transformation that'll really help us? And that'll lead us towards being able to generate and use data more correctly and being able to manage and meet customer expectations in a digital format. It's these 4 things that are going to help us drive forward beyond COVID. Debbie, I think you wanted to say something.
No, I just wanted to like bug you guys a little more. Like, tell me some of your really pondered closing thoughts. I'll start with Kevin, and then maybe you can share.
Okay.
But this definitely, it's completely, it resonates, and it's very much in saying, like you said, the people are, because I feel like people are like us, is competitive advantage. Like, as you said, the 3 Ps, definitely, like the 4th P, maybe the 4th quadrant. So yeah, I agree to this slide.
Yeah.
Sure.
Yeah, people enabled the pandemic pivot. Kevin, what kind of closing thoughts from your side?
Well, you know,
actually, before we close things up, you know what? I have some questions here that are coming in. So should I jump in with those, or Kevin, do you want to share some thoughts before I jump in with them?
I was just going to say a quick one-liner before we do Q&A. You know, those of us that manage teams and people, you know, when they hear automation and job automation, which is being accelerated, especially due to this, you know, pandemic, the point is not to replace our people. It's to get more out of the people that we have. You know, if we're constantly working on all the exceptions and the exception processing, and we can automate, you know, 80% of what we're doing, then, you know, we can scale as companies. And so you remember when DU came out? Oh my gosh, the automated underwriting system, underwriters are going to be, you know, automated out of existence. They're now more expensive than ever before. So, you know, the point is of automation is to enhance the relationship part, the people part, the connecting, and the exception processing. So I think that's an important thing to say to our people, you know, as we lead them down these paths, because there's fear. I mean, people are fearful. We're in a global pandemic recession. People are inherently afraid. Now we're going to make them afraid they're going to lose their job because Tavant's going to automate something in their process. You know, we have to make sure we say it in a way that makes them understand. So yeah, John, I'm sorry about you. Anything else you want to say?
No, thanks for that, Kevin.
That's a really good point. That's a good closing thought, actually. But anyway, all right. So here's a question. What are the typical digital gaps between those that are doing well right now from those whose performance could improve? I guess that could be for any of you guys. KP, if you want to start off, go for it.
I'm sorry, it cut out there real quick. What was the question?
Oh, sure. What are the typical digital gaps between those that are doing well right now and those whose could improve?
Well, I'll just speak for our perspective. You know, we have 3 channels at PRMG, and borrower experience has always been, you know, something we've been working on. But we found that in our wholesale channel and correspondent channel, the TPO, the broker and correspondent experience has been lacking. And we've been working very hard inside our Encompass-based environment to work and make that better. You know, the wholesale game is very competitive. I mean, there's some fantastic lenders out there who have built incredibly easy and efficient systems for brokers and correspondents. And so we spend a lot of time trying to close those gaps. And it's hard because, you know, we don't have 1,000 people on staff that are developers and, you know, engineers and all that kind of stuff. And so, you know, not to sound like I'm pandering here, but that's why you use a team like Tavant, is to outsource and flex for certain projects. So, you know, our gaps are in efficiencies inside operations as well. You know, the underwriter is still the most expensive operations employee by far. They're a lot more expensive lately. Thank God margins and spreads are good on loans, but that won't last forever. And so we'll be back to trying to find a way to create efficiency on the OpEx. And so those are big gaps in technology that we're working on.
Yeah, you know, from my experience, kind of having the chance to kind of interact with dozens and dozens of companies, one thing that I'm seeing as kind of a persistent gap is all of us kind of have the way we've already done things. We have our pattern, we have the way we do things, we have the way we handle exceptions, and that's the gospel truth. And the real challenge for most people is being willing to step away from that and approach it from a different angle. And it's a hard exercise. It's a hard exercise to envision a new way of doing what you've always done. That typically is where I see the stumbling block. Kind of on the front end, we've gotten really good at providing digital experiences of some flavor to customers and to brokers and to the wholesale context, like you highlighted. There's a lot of room to improve, but nevertheless, we're seeing more of that than ever before. But really, at the core of the originations, that's where we could really benefit from taking a hard look at why we do things and why do we handle the exceptions the way we do. And that's a good kind of fingerprint to look for, is what kind, where are the exceptions and how are they impacting us. Debbie, any comments on gaps?
I was just thinking, apart from the technicalities, I think communication is very important, just to kind of bridge the things which are happening, which are working well, and things which are not working well. So I think for me, transparency and open communication can be anything, your offshore teams and your on-site teams, because I think that would definitely not hinder anymore, and probably act as more like a buffer from the negativity and the slowdowns, which might get impacted overall.
All right, John, what are a couple other questions you have for us? Give us an easy one.
Yeah.
Let it all out, John. You're there.
All right, for mortgage brokers in particular, what can we do to drive digital forward?
So for mortgage brokers, what can we do specifically for them? And as mortgage brokers, what can we do for ourselves? Any thoughts, Kevin? I can lead out.
Oh, okay.
Yes. Yes. Say it again.
Yes.
So the question.
For mortgage brokers in particular, what can we do to drive digital forward?
Right.
Well,
I would. Mortgage brokers. No. Oh, go ahead. Sorry.
No, go ahead. I saw. I had an incoming call. I thought my do not disturb was on. It always, damn this Zoom. Can't wait to not use Zoom every day. Anyway, for brokers, it's just automation. It's ease of use. You look at lenders like United Wholesale. They've set the bar. Their system that's called ease, it's the bar. It's the standard. It's what every broker wants for their experience. 10-minute approvals, 2-day approvals, 7-day clear to close. That's it. I mean, what have you created to compete with that experience? That is the bar. And so, automated loan estimates up front, one-touch ordering of closing disclosures, a system that has basically, no, you cannot submit these conditions because you didn't submit 9 out of 10. It blocks you. It doesn't let you press the button to submit the loan because you didn't fill in the fees on the loan estimate. And if brokers are willing to send more complete files, if the trade-off is faster everything, but you have to have a system and a portal that accomplishes all that and then streamlines it on the back end. So and now of course it's easier, and I'm not sliding this company because they're number one. They're fantastic in wholesale, but it's easier when you're not doing the government annual underwrites, the non-QM loans, the tough second liens. When you can streamline your process and have assembly line underwriting behind the scenes, you can create those kinds of front-end portals and technology that just make it easier to do business with. And so, for us, at PRMG, we've chosen by choice to be a community lender. I mean, we do Chinoa down payment assistance loans. Those are not easy loans. They're not easy borrowers. They're tough transactions. And so it's harder to automate the tougher deals with the dings on the credit, all the conditions, letters of explanation, stuff like that. So it's not an excuse, it's just reality. And so that's our challenge, but our brokers love us for it. We've taken up the challenge to do stuff that's hard to do. And, it matters on the margin for those borrowers and brokers in those communities that otherwise wouldn't have liquidity or a lender offering them that product.
Thanks, Kevin. Appreciate that.
Kevin, I have a question here that was specifically directed to you.
Bring it on.
Are you ready? All right, here we go. Kevin, if you were to design your phase 1 digital map today with all Tavant now offers, what are the low-hanging processes or easy processes that you would automate first? POS aside, after disclosures are initiated.
It would be in underwriting. You know, the fin decision, the whole VLOX suite of products that Tavant offers behind the scenes. You know, anything having to do with the financial decision. So fin decision was something that they had rolled out many years ago, and we've always kept our eye on that. And so for us, that making underwriting easier and more automated is probably the number one task, because it again, the underwriter is most.
I think we lost you.
Come back in a second. But I couldn't agree more, and just until Kevin reconnects.
It's very challenging.
Hey, Kevin.
Yeah, go ahead.
Hey, you lost connectivity for a little bit, so you got to rewind about 20 seconds.
Well, I was just going to say that the underwriting piece is the hard part.
Yeah.
And it translates out front to faster turn times, less conditions, you know, more automation. It ultimately helps, you know, with the most expensive employee, the underwriter, and efficiencies and OpEx. So that's probably the number one goal. And it's a challenge. It's very hard at our company. You know, if I were to start a brand new company from scratch, I would say, you know, refionly.com, and I wouldn't do anything less than 720. I would. I mean, right now I'd probably do, you know, 10 billion a month, and I could sit on a beach drinking a Mai Tai. You know, it is, but that's not who we are at PRMG. That's the low hanging fruit.
Right, and we can deliver a Mai Tai to your office.
I prefer a bourbon.
Okay, well, I've got a very special question here for all you guys. Actually, this is more of a statement. Are you guys ready? Here you go. I don't think COVID-driven digital changes will last. It's just a statement.
Yeah, so I mean, like, so what do you say to the skeptic? You know, that says, this is all temporary. And
well, it depends on what it is, right, man? I mean, you know, I mean, we were using Zoom before, so
right.
You know, can we go back to using a little less Zoom? God, I hope that doesn't last. I agree. You know, you know, I like like. You're right. Like, I'm not traveling. You know, what did you say, Matt, earlier? You said I'm used to being on the road. Now I'm in confinement, or what? I don't know.
Yeah, I was you know, on a plane all the time. Now I'm just in the basement.
Yeah. I mean, I would love for that trend to go back the other way. I like traveling. I love fun. Yeah. I love it. I love being in the air. I love going to different places. So I agree. That's a trend that's going to go back. You know, those are, but e-commerce, I mean, Uber and Lyft took off. Now they're basically shut down because no one wants to get in a random car with someone else that could have sneezed all over the place and got you sick. But I think that some of that science will kind of bear out, and then that will be a trend that will go back. And so that's a trend that goes back to more technology driven. I mean, you know, cabs are still screwed, you know, and so job automation. I mean, I remember sitting 2.5 years ago in a fireside chat with Mark Benioff, the CEO of Salesforce, and this guy, who's the CEO of ABB. And they're at the Presidio in San Francisco, and they're saying, when, not if, when 45% of the world's jobs are automated, what are we as business leaders going to do to shepherd our people into the new world? Don't use automation just to fire your staff and save money. Retrain, retool that staff to do other stuff. That was a trend pre-COVID. That's not going anywhere. And so, you know, just to put a bow on the statement, to reply to that statement, maybe things aren't as accelerated as they are now because of COVID. But they are
That's very relative, I think. It's pretty relative. You never know what's going to happen.
great.
Very true.
Right. Well, I
But
think
yeah, Kevin, I'm on your page. I missed the travel. I really.
I
All right, you
have
know what? I don't have any other questions.
okay. So just
I have
one closing
Oh.
thought from my side.
fire away.
Go ahead. Oh,
Well, I
just
was
one
going to say,
closing.
I had something booked for first week of August, and they moved it back a month. So, you know,
Sorry.
it's like just keep moving it back. You know, that everyone. You know, anyway, go ahead.
You're going to enjoy
Thank
your
you.
December vacation. Oh. Hey, one closing thought for everyone on the phone and on the webinar. First of all, just really appreciate your time and attention. We hope that this has kind of sparked some ideas that you can carry forward and apply them in your own context. And please embrace the reality that things are changing. They're changing quickly, and with some combined effort, your company, like Kevin's, like many of the companies that we look to as examples, can make the pivot. That's really what this conversation is all about, is how do you make the pivot and how do you sustain it? And so just really appreciate your time today. Thank you.
All right,
Thank you,
excellent.
guys. Thank you.
Hey, everybody, just to let you
Thank y'all.
know, there's going to be a survey coming at you with about the next hour. If you can take a moment, fill it out, that would be awesome. We really want to know how we did today. And if there's any topic that you would like to see us cover, let us know. We'd love to know about that as well. Thank you, and have a great rest of your day.
All right. See you, John. See everyone. Thank you.
Thank
See
you.
ya.
Bye.